Hello and welcome back to the Devil's Advocate. Today we are coming off of the 2020 annual shareholder meeting and battery day, and what a reveal it has been. Initial analysis, initial understanding, and my takeaway is that Tesla is going to be a $15 trillion company very soon. Elon Musk says that the target is, he didn't specify the number, but based on some of the numbers, and I'll give you the reasoning, Tesla will be more than $15 trillion in valuation uh, in the coming decade. Let's get into it, shall we? The first uh, snippet that I have, the snip that I took from the presentation, is essentially a very good summary of all the improvements that have been spoken about in terms of the new batteries coming off of the Roadrunner system. Uh, Massive range increase uh, uh, from the same amount of kilowatt hours, 50+% increase in range, which means that potentially a Model S today, which is about 400 miles of range, will be 520, 550 plus uh, in range. Cost of the battery pack, a reduction of more than 50%. Now, we all know that the battery pack is potentially one of the largest um, costs that go into the car, and a reduction of about 50% uh, is a key driver of margins and potentially a key driver of cost reduction for the vehicles that Tesla is going to sell over the next 2 to 3 years. And more importantly, investment per gigawatt hour is reduced by almost 70%, which means that the upfront cost, the amount of money that Tesla is going to have to spend to build the facilities, is reduced drastically. Now, why is this important? Let's look at what Tesla spoke about, the cost curve of battery. And back in 2012, battery packs were very expensive and formed a really large percentage chunk of what the cost of an EV was, and it has come down. But you see in the dotted line that says the forecast, uh, looked as if it was plateauing off, and this was a problem because batteries were still, in fact, are still not cheap enough uh, to be available to a large population or a large number of people, a large chunk of the population that is there. So what Tesla needed to do was a step change. And what they did was, well, more than a step change, really, bringing the cost down by almost 50%, bringing the capex down by almost 70%. So there is a creative benefit, an annualized depreciation cost benefit over there as well, and an increase in the range. So you need less number of batteries to travel the same range, or vice versa. Uh, for the same amount of battery capacity, you're basically traveling 1.5 times the distance, which means uh, that you're not only increasing the length or the life of your battery, and theoretically are approaching a million-mile battery without even having to design for it. You're also making sure that you have to charge and discharge it less. Charging times are going to go down drastically because of the massive amount of increase in power and increase in current that the battery can charge at and discharge at, right? So how does it impact uh, overall? How does it impact our capex? Why was that last part so important? Today, 2018, a gigafactory in its full scale gigafactory is 150 gigawatt hours in plant. With this new with the new battery, with the new anode cathode that they have come up with the new improvements in factory design and the new improvements in vertical integration, of the battery with the vehicle and of the battery with the stationary storage systems. We are talking about a factory footprint that is 10x smaller, and the cost per installed gigawatt hour of production capacity down by 75%, which is uh, looking at a 7x increase from the same facility, which is in fact a smaller facility. So you have to basically build a smaller factory to get up to a terawatt hour, and we are really talking about the tera factory now. So this is a huge improvement, reduces the amount of money that Tesla has to spend upfront, makes it faster to build these factories, and where Tesla wants to be in terms of battery capacity in 2022, 100 gigawatt hours, which essentially is outside of what they're buying from Panasonic, from CATL, from LG Chem, and from others. So 100 gigawatt hours of internal capacity and up to 3 terawatt hours by 2030. What does this translate to? Uh, Very quickly, the uh, what Elon Musk said was that they are looking at producing 20 million vehicles a year, and this is just vehicles. 20 million vehicles a year of in a steady state, so that we can replace the world's fleet in 15 to 25 years. Now that is a 40x unit growth from where we are today. We're doing about what 400 to 500,000 cars a year. So going from here to 20 million vehicles a year, and Elon Musk has put up a credible path to actually hitting this number over the course of a decade. Now, why is this important, and um, how does this translate to a valuation increase? Today, Tesla is valued at about $400 billion, right? So when we talk about a 40x increase over 400 billion, that is 400 into 4 is 1.6 trillion, and into 10 is 16 trillion, just in terms of how many cars they're going to produce. But there are a few caveats here. Of course, profitability matters. Of course, unit economics matter. Of course, as they scale up, a lot of the future advances are already tied in, or accounted for in a high stock price today. So let's for a moment not say that it is going to be 16 trillion dollars. Let's give it a 25% discount. Let's say $12 trillion, or even $10 trillion for that matter. So Tesla's vehicle unit, that's going to use about 10 terawatt hours of capacity over the course of 10 years, is going to be valued at, let's say, $10 trillion. Uh, there's another segment that Tesla is really targeting and is looking to scale up, which is the stationary storage, and that market is increasing. They're looking to do another 10 terawatt hours of stationary storage, and if we price that at, uh, let's say, a lower multiple, let's say half of what, in just purely in terms of battery capacity, that they are targeting towards. Let's say that is valued at $5 trillion, and this, let's also say that it includes advances in solar and the entire solar deployments that is there. Now they are ramping up solar deployments as well, and let's bundle all of that, right? And say that solar plus 10 trillion, 10 terawatt hours of installed capacity over the next decade is going to be valued at a fraction. Now, how do we get to this valuation? Let's look at what the costs are, what the installed costs are, right? For every terawatt hour for every, let's say, watt hour of battery installed in a vehicle, today Tesla's margins are very, very small in the vehicle, whereas their margins are relatively larger in stationary storage. There has been a bifurcation of cell chemistries, where they are essentially using for storage iron-based, an iron-based chemistry, which is about half the cost at not much of an energy expense. Essentially, there's a much larger reduction in cost of the much larger reduction in the unit cost of the stationary storage, which is going to drive even higher margins, right? And uh, compared to today, we already saw that the price of the battery pack is coming down. The battery pack is now going to become a structural component of the vehicle, which is essentially, then going from cells and modules to essentially having batteries as a structural component in order to reduce cost. This reduces cost by a large margin as well, which means that the cost of building the cars is going to be lesser, and therefore margins are going to be more. What Elon Musk also said is that in about 2 years' time, they want to launch a $25,000 Tesla, which looks like a hatchback as of today, which means that the price of the Model 3 is probably not going to uh, go down much beyond 37,500 it is today, or about 35,000 it is today. But the Model 3 will certainly benefit from increased or better specs, as battery improvements are not only uh, you know lim- uh, I certainly see that the battery improvements will not only be limited to the big fat cell that Tesla has just shown us, but some of these, especially the ones around factory design, the machine that builds the machine, and continuous processes, etc., will percolate to its partners as well. So the cost of actually building the cars is going to be lesser, right? This translates to amazing, an amazing forecast for margins. Elon said that today the margins are roughly about 1% net margins, but there is a case where this is going to increase to potentially more than 20-25% of net margins. And let's look at how we arrive at that number. Uh, the Plaid Model S was also launched in Battery Day. So the Long Range Plus, it's a dual motor setup. It costs about $75,000. Let's say that the margins on this one are very thin, right? The cost of producing this vehicle is about $70,000, and this is all hypothetical at this point in time. I will get into the real numbers and post an update to this video, but let's assume that the cost to produce a Model S today is $70,000, and then the performance version has the same battery pack, has the same shell, has most of the components are the same. I'm not sure if the motors are different, but even if they are, let's assume that there's a $10,000 incremental cost to build the performance version. So $80,000 to build the performance version, right? Now, if you think about it, what would be the cost of the battery pack? Let's say the battery pack costs 25,000 dollars, maybe $15,000 on the lower end for the Model S. So Tesla today makes close to $5,000 on the Model S, and this is without autopilot and the software part of the sale as well. So $5,000 of margin on the Long Range Plus. Let's say it costs $80,000 to $85,000 to build the performance version. So $10,000 to $15,000 on the performance version, right? If we assume that the performance version costs about $80,000 to $85,000 to build, and we tag on a third motor, right, and say that the motor costs $20,000, right, we're talking about uh, uh, a cost of about 100 to $105,000 to build the Plaid Model S. So we are talking about $35,000 uh, in in profit, in margins. So we are going from $5,000 to $35,000, which is powered by the new batteries that we've got out. So it's my belief that the Plaid Model S is going to be powered by the new batteries, because in order to power the three motors at the level that it needs to be powered, there's a lot more power that needs to come out. The amperage coming out of the battery pack has to be much larger than what is possible today. So I do believe that it is going to use some of the new and improved batteries, the big fat cell that Tesla has released. So if we factor in the fact that if nothing else changes and they just add a motor, right? We're talking about a cost of approximately 100 to $105,000. And if we factor in the cost improvements that the new big fat cell has, we're talking about using lesser number of cells. We are talking about structural changes such that the battery pack itself is a structural component, so it costs less to build the car. We're talking about uh, per cell, the unit cost per kilowatt hours is lower, and the number was about 56%. So let's assume that it's not 56%. Let's say that the battery pack today costs conservatively, it's a very, very conservative estimate. It costs a minimum of $15,000. And the cost reduction sort of get to a number that we are saving about $5,000 on it, right? So the new battery pack for the Model S is going to cost approximately $10,000. What that means is that there's about $40,000 of margin that is available on the Plaid Model S, and that means that we are moving from $5,000 to $40,000. And when we go from this gross margin to a gap profit, right, we see that the 5,000 on $75,000 sale um, is sort of, there are other expenses that Tesla has. So a very small fraction of this $5,000, uh, uh, less than $750 actually contributes uh, uh, to the bottom line, or essentially to the gap profit. We are talking about moving from $750 of contribution to gap profit to close to, or should I say more than, thirty to $35,000. So it's a huge improvement in terms of percentage, in terms of unit economics. And when over the course of the next 2, 3, 4 years, uh, when there are a lot more vehicles, when we have millions of vehicles rolling out a year, this number is essentially going to get complemented and increased over time, such that my belief is that the by 2022 to 2023, uh, Tesla will be a company. Just the automotive part of Tesla is going to run at gross margins of more than 20 to 25%, even if cost reductions are taken into account, because they've already announced that the Cybertruck is going to have more than 550 miles of range, and is going to start at the $40,000 mark. The Model 3 today is at about the $37,500 mark. It has about 300 miles of range. So assuming they keep the specs the same, there is a significant amount of margin play that is available with these new improvements. And the new model, the new smaller Tesla slash taxi Tesla is going to be at approximately $25,000. And uh, I am, my view is that they're going to make about $7,000 to $10,000 of margin in that as well. Uh, just because of the tremendous amount of cost that they are saving. The amount of capex required to build these facilities, these factories, is also a lot lesser. Remember the 70% reduction in uh, installation cost, or the cost of the factory to build these new batteries translates to a relatively large contribution in cost savings for the overall factory as well. So that's my case. Tesla is gonna go to Tesla is very soon going to go to about 15 trillion dollars in valuation. And yeah, I'll put a link to Tesla's Battery Day live stream, recorded live stream, in the description. Please go, please watch it in full. There's a lot of information there. There's a lot of good information there. Please Comment below if you think that the way I'm approaching it and the way I'm thinking about it, if it is a good way to do it, if it is inherently flawed, please put down your comments. If you like the content, if you like my analysis, please encourage me by liking this video, by subscribing. I'm very new to the YouTube ecosystem, and I would love to continue bringing analysis, news, and uh, my take on what is happening in the Teslaverse, in the EVverse. And yeah, I'll leave you at that. Please like, subscribe, and let me know in the comments what you think of Tesla going to $15 trillion over the next few years. Now, one thing is that I am a Tesla investor. I live in India, and there are a few apps that I use to invest in Tesla. Of course, my position is not very large, but it is still a significant proportion uh, of my portfolio. And uh, if you'd like to know how I'm thinking about where Tesla is going to be and how much money do I put into Tesla vis-a-vis others, please let me know in the comments and I'm going to make a video on that. Cheers, you guys. Have yourself a great day. Bye bye.